Hello, everyone. Welcome to the stock-specific class here for Thursday, February the 25th. Again, I'm doing the class a little bit early in the day, not the normal time. I'll be back to the regular schedule next week. I've actually, for those who don't know, I've been on vacation this week, and so I've kind of had to do the class kind of around my vacation schedule. And it's been a little bit unpredictable, so I wasn't able to have a set time. But hopefully that's okay with everyone, and you should get this by, the recording of this should be posted by the normal start time, so you should be able to go through it and get the stocks I'm going to go over today and get the training I'm going to go over today. By the way, we're going to finish up Elliott wave today, and we're going to be talking about the training today is going to be on trading wave 3 or wave C, which is a pretty cool technique. Once you understand the waves and understand the context of everything, you can look for stocks that kind of fit this category, and they can be very high probability trades when you find them. So it'll be kind of a fun little training to do today. All right, let's real quickly here. Let's just do a little bit of a market update before we get into the specific stocks. It's been a little bit of a roller coaster week. We had that big reversal. It was a big sell-off, I think, at the time I was doing the update on Tuesday, and then it had a big reversal, bullish reversal. Yesterday there was some follow-through to that. Today, though, we're back down again. And for those that don't understand kind of the dynamic of what's going on, the bond yields continue to rise and continue to rise rapidly. And if you don't know the significance of that, we're talking about the treasury yield, treasury bonds. These are trading instruments that usually it's the big professional traders and money managers that use it. But whenever there's uncertainty in the market, or the market looks like it could sell off, a lot of times they'll pile into bonds, treasury bonds, because they get a guaranteed basically return on those. They're one of the safest trading instruments out there. And but the yields are usually really low. They're not making very much. So what they're constantly weighing is they're weighing the risk of making a bigger return in the market, but a riskier return versus a safe return. And that's the battle these fund managers are going through all the time. And but as you learn to read what they're doing, you can gauge whether they're very bullish on the market or they are getting bearish on the market, based on what they're doing. And we usually assume that these fund managers are the smart money because they're the ones that are in the market all the time and moving the market. We can't move the market with our smaller positions that we get into, and so typically they're usually the ones that are a little bit more accurate. Well, what's going on right now is those bond yields are going up, and the 10 years is approaching 1.5%, which is starting to become very attractive as to put money into. You can get a little bit better return than they have been able to get over a period of time. And so they're starting to put that money, well, taking money out of the riskier trades that have run up big. You know, all these small cap stocks that we talked about over the last several months. By the way, I know I haven't moved any screens or done anything on the. You're kind of just staring at the same picture there of the direction alerts, but I just wanted to get this out of the way before I start going through the normal routine. But they're getting out of those riskier trades and they're putting that money into bonds, or they're starting to do that. It's becoming more attractive to do that, and as those yields or bond yields are so high. So that's why you're seeing the weakness when we're having down days. The weakness is in the small caps and it's in the technology sector, the QQQ and the NASDAQ, because that's where those growth stocks are. So it's showing you that money is coming out of those riskier trades and going into those other areas. So Now, bonds in general are very oversold right now. Well, I'll take a look at the chart of the TLT, and you can look at this by following the TLT. And so we're due for a little bit of a bounce in bonds, which should alleviate some of this and cause the market to be able to rally a little bit. I'm just hoping that we don't drift below some of these key support areas where panic selling could start to kick in. I'll show you that when you look at the charts here in just a second. But as far as the direction alerts, we're still. The overall market is not overbought. Momentum is still in it's just barely moving into the bullish trend range. Breadth is in the high range, but again, nothing extreme yet. And sentiment is in complacency. It's getting a little bit closer to extreme, but not there yet. The buy-sell ratios have come a little bit closer together, and so they're not in an extreme condition there. Sentiment, we're off the extreme level in sentiment. So there's definitely room for the market to be able to rally, but it just depends on how long the market stays or is worried about those bond yields going higher. So let's go look at a couple of charts here real quick. Here on the SPY. What's going to be very key, you can see the big reversal today, basically reversing all of yesterday's move. But what's going to be very important is going to be the low of Tuesday right here on all the charts. That low of Tuesday is going to be critical. And the reason for that is that this is the extreme that we reached right here, and we came off those lows. There was buying that pushed the market all the way back up, not only to where it opened on Tuesday, but it ended up closing higher than where it opened. So there was a huge amount of buying surge there. We can see it in the volume as well. If we put the volume bars on here, you see that huge volume surge. And so because a lot of people were buying in this area right through here, this extreme down here becomes very important, because as we move into this candle, and we're starting to do that today, which is concerning me, because now we're moving into the candle, which means that we're getting to where people that got in near the end of the day up here are starting to be underwater a little bit. They may start to sell to get out, to cut losses, or because they're fearful of the market falling further, and that could fuel today's move to go down even further. And the more it goes down, now that we're in that candle from Tuesday, it could drive more selling, and it'll really become panic selling if we drop below that intraday low from Tuesday. And I don't see anything stopping this thing from getting down to this next support level down here. If that happens, it'll move down there probably very quickly, because it'll be panic selling at that point that'll kind of kick in. So that it concerns me even more on the QQQ, and we're getting much closer to that on the QQQ because this is, well, and the IWM too. But obviously the QQQ has been underperforming for the last couple weeks, and so. But see, now we're already, with today's move lower, we're already below the open on Tuesday. And so we're in kind of a dangerous area here. So we're keeping an eye on that. There is one thing that could turn things around, which I'll show you here in just a second. But let's take a look at the IWM as well. Now, the IWM hasn't even entered into the body of opening and closing area of Tuesday, but it's close to doing that. And with the other indexes already kind of moving into that area, that could happen pretty quick here. But let's take a look at the TLT. Here's bonds. You can see, first of all, I want to show you that we're in extremely oversold condition, very oversold. Now, we can stay oversold for a while, just like we can stay overbought for a while, but usually when you really get to the far side, you get to the far left side or the far right side over here, when it's overbought, usually it's within a few days or so that it'll start to reverse. And I might take the volume bars off here so you can see. So we opened lower in bonds yesterday, but we managed to close higher. We had a bullish reversal day, and I think that's why we saw the market rally like it did. Is it looked like, we're going to see those bond yields come down a little bit and see more money going back into the market, but it's dropped even further here, and becoming even more oversold. So we'll see if that bounces again. Even I think I mentioned this on Tuesday. Even if it bounces like a little bit like this, or just a little bit of a bounce, I think that can help the market to rally a little bit. Now, real quickly here, I know I'm spending a lot of time on a market update here, but even though I think that we can rebound, the way we moved the last couple days here, it really looks like we're gonna break out higher. I know the Dow did break out higher, and the Russell 2000, or no, I think the Russell was still below its low there. Dow broke out to a new all-time high, and yeah, the Russell's still a little ways away from that. But I think that all of these, with the exception of the NASDAQ, are going to end up breaking out again. But I don't expect a real strong breakout. I think we'll start to see that volume, the market may be moving higher on lighter volume again, kind of what we saw before this last drop. And I think the next drop is going to be a big correction. What's happening here, the dynamic that's happening here, is that each of these dips that go back up again, people get in the habit of buying the dip and it goes back up, and they've been rewarded for it. It's worked. But obviously that's not going to work forever. And when you start to recognize that, when it gets to the point where you're actually recognizing that buying the dip is working and it works every time, and everyone gets confident that it works every time, and everybody assumes it's going to go right back up, and that's the point when it won't. I mean, we've studied this with Elliott wave. It's when it feels like it's safe to get in, it usually isn't. And as you rebound from these dips, every time it starts to feel safe to get in, and it has kind of started to feel that way a little bit lately as well. But I think this next sell-off, what's going to probably happen is people are going to buy the dip. It's going to go lower again. They're going to buy more, and then it's going to really go lower, and it's going to wipe them out. And a lot of people are going to get wiped out completely when this happens. I mean, it's a playbook of every major market rally that at some point it's human nature. The traders get overconfident. They feel like it's safe to get in. They feel like there's no way they're going to lose money, and that's the point when they end up getting wiped out. So what we're hoping for is we get some good clues that bigger sell-off is about to happen, and that we can make sure we're prepared for it, and some people can even look to trade or profit from it. If either know how to short stocks or buy put options. We're going to start covering options next, and so you can learn about how you can use leverage to make some money on some of these moves. All right, let's get into specific stocks. Again, what's important to go over this stuff, though, is that it leads into, when we're going over specific stocks, if you don't understand the market conditions or what's going on in the market, then you can't really make good, smart decisions on individual stocks that you're getting into. If the market looks like it's going to have a big correction, or very close to a big correction, then you don't want to be loading up on new trades at that point. But I still think there's some upside. Again, today, that may change at the end of the day, depending on how things go. But like I said, with as oversold as bonds are right now, they're due for a bounce. And so I'm pretty comfortable that thinking that probably as soon as tomorrow that we'll see a little bit of a reaction there, and that we can see the market rally a little bit off of that. But keep those intraday lows. Make sure you note those from Tuesday, because if we break those, and all bets are off, and we're probably dropping pretty quickly. All right, let's take a look at some individual stocks. I've got a few here. Some of them are the same names, so I won't spend much time on those. Under retail, I still like Kirtland's, KIRK. Let's switch this back over to signals here. In fact, it's just going to a buy signal today. If it can hold, that's off the highs of the day, quite a bit off the highs of the day, but this is very close to going back to a buy signal. And, if you want a little bit of extra confirmation in this type of market environment, you could wait for it to break out. If it breaks out of this range, and it was at the intraday high today, but if it breaks out of this range, it could really start to explode higher off of that. So keep an eye on that. That could be just an additional confirmation if you're looking for additional confirmation. Another one I like is this FVRR, 97 strength rank. Now this is a little bit of a sharper pullback right here. Usually I like to see it a little more like this, where it's, you get a clear ABC. This could have been wave A, wave B, wave C right here. But if this is the bullish reversal right here, which is Tuesday, there is a little bit of we can go back here, and it seems to be holding this trend line right through here. So this seems to be bouncing off of that trend line, and you've got your upper trend zone right through here. And so it looks like if it can continue to move higher, there's good potential for this to move up a pretty good amount to kind of keep going along with that trend. So that one I like, and it is getting pretty close to going back to a buy signal as well. It's not too far away from that. Another decent up day. In fact, at the highs of today, it was probably pretty close to getting back to that buy signal. But that's one I like. We go into the transportation sector right here. Now this one, you might have to be, I like the pattern, but you have to be a little bit careful on it. It's this top one right here. It's actually a 99 strength rank, YAYO. This is a smaller company. It trades, I usually try to make a note of this, but it's an over-the-counter exchange, so pretty thinly traded, so just be aware of that. But it's a cheaper stock, and it seems to be kind of completing a bullish ABC pattern right here. This looks like wave A, wave B, wave C. Again, wait for it to go back to that buy signal. But it's had a really big breakout move recently, all the way up through January. It was in this long extended sideways range, and then really exploded since the beginning of the year. And you've got a decent pullback right here. So that's one that's, again, really small company, but I like the pattern, and it's it looks like it could be a good opportunity. Computer and technology. A couple of ones we've already looked at that I still like. IZEA, 99 strength rank. It kind of had that bullish reversal, kind of completed that possible bullish ABC pattern right there. And it's not down too much today with the market. In fact, it's actually trading a little bit higher than the open with the market be down there. So this is actually looking pretty strong today, despite the rest of the market weakness. And this one is still a little ways from getting to the buy signal there, but we probably want that confirmation because of the market conditions to see if these things can move up a little bit over the next couple of days. Another one in that same sector I've gone over before is Digital Turbine. APPS is a ticker symbol, 98 strength rank. And again, it seems to be kind of had that reversal on Tuesday right off that trend line there. And it's down a little bit over the last couple of days, but again, wait for that confirmation for it to go back to that buy signal. And it's not too far away from that. All right, another one in the sector. This one I haven't gone over before, but ZDGE right here. Now it's this looks like a possible ABC right here. It's a little bit of a longer C leg, if that is a C leg right there. But again, I think if it holds in this area right here and goes back to that buy signal, that would be, that's a good pullback to buy into. If this isn't a downtrend that's going to drop lower, then again, we don't want to be in it anyway. So definitely want to wait for confirmation on that. And I really don't want it to go down much further than where it is right now. But if it can, like I said, that would look like a pretty decent pullback. If it goes back to a buy signal from here, I think that'd be a pretty good trade. And then one last one in this group. I can find it here. This QUMU. It's a 95 strength rank. But again, I like it had the breakout move right here, and then it kind of pulled back in a little bit of a choppy fashion. That looks corrective right through here. Now, I don't want it to drop much further than this because it's kind of pulled back to the previous breakout area. And so you're wanting that, what used to be resistance there, to hold a support. But I think if it holds here and goes back to that buy signal, it shouldn't be too far away from going back to that buy signal. Yeah, it's about halfway in the hold range here, so that should work out pretty good. All right, let's do one more sector here. Let's go to business services. And then I like this CLSK 97 strength rank. Now, this is one that actually could dip a little bit further. What I'm looking at here is that the possibility this is a much larger ABC. Had this big run up right here. And this looks like that could be wave A, wave B, and this is wave C. It's gone to a sell signal on Tuesday. Now, if this is a C leg, it could actually drop down here a little bit further and still go. So this might be one that you're kind of watching for a little while here. If it does go back to a buy signal and starts to take off, I mean, that's a big enough corrective phase right there. It could, you could be looking at just kind of a sideways corrective phase here where this could then break out. If it does break out, you could use the top and bottom of that range as a target, a distance of the top and bottom of the range projected from the breakout area. It should go up about that distance if it breaks out. But just keep in mind, this could pull back a little bit further, still be okay. So this might be one we kind of keep an eye on and look at again a little bit later. It's got a while to go back to that buy signal because it was just at a sell. In fact, it might move back down to a sell today. All right, let's look at next one is AQMS. And again, this looks like you had a nice big run up in the trend. This looks like it could be wave A, wave B, wave C. And then you're waiting for it to go back to that buy signal. And then the last one is this KSPN, 95 strength rank. But again, it looks like this could be a pretty distinct ABC correction. Again, I've been consolidating a long time. I like these stocks. A lot of these have big potential. They don't always work out, but when you see them consolidating this long and they break out, usually there's something that is driving that breakout move. That breakout move, especially when it goes parabolic like that, isn't going to be able to sustain itself. So it usually will go into a correction. And, again, it looks like it's following the psychology of a correction where you get the initial sell-off. It tries to rally again. This looks like the buying opportunity. You get the bounce, and then it comes back down again. And then, usually this is the area where it'll start to take off again. And you could be in the stages of this, starting a much bigger uptrend. Now, it doesn't always work out that way. Sometimes I've seen these stocks, they come all the way back down to where they were before whatever the news was that they broke out on. Maybe it was a rumor or something, and then that fades and it comes all the way back down. But again, I think that's why we're going to wait for this to go back to a buy signal, and that'll give us usually a little bit more confirmation that this thing is starting to move back up if it can do that. And it's got a little ways to go to get to that buy signal. So this is one to kind of keep an eye on and see if it starts to take off again and starts to move again as well. All right, that's it with the specific stocks. Let's get into the training for today. And the training is trading wave 3 or wave C. Now, what we're looking for here is we're looking for a specific setup. And the reason why I love this setup is because it can create some very high probability trades. Now, I'm not suggesting that this is the only thing that you're going to be looking for your trades. This doesn't happen very often. But when you see it, you want to take advantage of it. And I'll kind of explain when you're most likely to see it or start when you most likely need to start looking for it. And I'll show you the bullish version of this trade and the bearish version of this trade. To start off with, let's look at the kind of the bullish version of the trade. Now, first of all, we need to understand that the two most impulsive waves are wave 3. Typically, we've talked about how wave 3 is usually the longest wave. It's usually the most explosive wave. And then the next one that's usually most explosive is a wave C. So if you're in this correction right here, this wave C down right here would tend to be the most explosive wave. Okay. And again, remember, this can show up in different contexts. This is a larger wave C right here. You can have a smaller wave C. You can have a smaller wave 3. So just keep in mind that we could be talking about different degrees in the trend. But just make that note. If you're taking notes or something, make that note that typically your most explosive moves are going to be in wave 3 or wave C. And it makes sense when you understand the context of the trend. I mean, wave 3 tends to be the most explosive wave because you've kind of reversed the downtrend. You had your wave 1 where it was a rebound from the lows. You had your wave 2 where sometimes the news can still be bad, but it's not carrying the stock lower. The stock is not dropping lower off of that. And then you get into wave 3. Remember, when I went over those wave characteristics, by the end of wave 3, the trend is considered up. And so people are now aggressively buying the stock in that wave 3. And that's why it tends to be the strongest and most impulsive wave. The reason why wave C tends to be the most impulsive of the correction is that you have the sell-off of wave A, and during wave A, at the bottom of wave A, a lot of people view that as a buying opportunity. Remember, I talked about that in those characteristics. Wave B tends to be the suckers rally, where they think it's going back up, they're buying, expecting it to go back up, but it's just not taken off. And then you get wave C, where people panic sell, and that panic selling really drives things down very, very quickly. Wave A selling is usually not panic selling, it's usually profit-taking selling, or, there's usually not a lot of fear behind the selling in wave A. So although it can drop, it usually doesn't. You usually don't see the extremely high volumes on the drop. Those are usually what you see in wave C. So that should help you understand why we like to target those two waves. And just like wave 3, usually when you're in wave 3, you've already kind of bottomed out. The trend is already starting to reverse. The opposite is true when you get into wave C. The trend is starting to turn downward. You're starting to be aware of the downward trend at that point. And that, like I said, that's what kind of triggers the selling there. Now, sometimes we don't know whether we're trading a wave 3 or wave C, but it may not matter. Now, I'm going to draw something here. I'm going to do some drawings here. And I'm going to do the bullish version of this first. Let's say you have a stock that's been in a downtrend for a while. Usually what'll stand out to me is a stock that's really been declining a long time, or at least a noticeable period of time. Again, you could be looking at this in an intraday chart as well, and that time, a long time in the intraday chart might just been 2 days or something like that, a couple of days or something like that. So you have this decline, and then so you got an impulsive move down, and then you see an impulsive move up. So let's say in the last few days or so, maybe in the last couple of weeks, probably a few weeks here, a couple of weeks here, the stock has moved up sharply. And then it's pulled back in an ABC pattern. That's the type of context that I'm looking for this trade. Okay, and what's really important to me is I want to see a long declined move, and preferably kind of more of an impulsive move where it's going down pretty sharply. It doesn't look choppy or sideways. And then an impulsive move up right here off the lows, followed by a corrective ABC. Now, with the long move down, I'm assuming that this is the end of a downtrend, the end of that larger end of this larger ABC right here. We're down here near the lows of the correction. And it may not look like an AB, it could look like a long, just straight move down. But the bottom line is that it's had a big drop. And then you get that impulsive move up, and then that ABC. Now this could either be wave 1, this could be wave 2, and we could be about to go into wave 3, and that's one of the reasons why I would want to trade it, because you want to get the most, you want to get in to trade the most powerful part of that move. So you're wanting to trade that, or hopefully trade that wave 3. Now, you've got this long downtrend right here, and you're assuming the downtrend is over because it's been moving down for a while. You got this impulsive move up, and then you get this corrective move right here. But there is a possibility that the downtrend isn't over. There is a possibility that this move up right here is wave A. This correction right here is wave B, and it starts to move up right here, and this ends up being wave C of a bearish ABC pattern, and then that downtrend continues. But what I like about this situation in this context is, remember, where are we looking to trade? We're looking to trade right here. If this ends up being wave 3, great. We get a really big move up, really strong move up, most powerful wave. But what if it ends up being a bearish ABC pattern? What if this is wave C of a bearish ABC pattern and ends up dropping? Well, guess what? You're still getting a move up. It just may not be as high or as far as the wave if it's a wave 3. So in other words, whether this is starting a new uptrend or whether it's just in a correction for another move down, from this context right here, you should get this move up. Now, maybe this is only a $5 move and this would be a $10 or $15 move. You still have a high probability of getting this move, whether that stock is still is reversing into an uptrend or still in the downtrend. Now, I don't want to oversimplify this to make it sound like it's guaranteed to work every time or that's always going to work every time. No, we're talking about probabilities. It's a very high probability trade situation. There's a very strong chance that you're going to get some sort of an upward move off of that. So we call this trading wave 3 or wave C. Now, the bearish version of this, which is probably what you'll find a lot of if the market starts to roll over at some point here, is it's the opposite. You're going to see a long run up in the stock. You're going to get that initial sell-off. So you'd want to see impulsive up. You don't want to see impulsive down, and then a bearish ABC pattern back up or sideways. It starts moving sideways, and that would be the case for the other one too. It could move sideways on that ABC, or it could look more sideways. Either this is wave A, this is wave B, and you're going to get wave C coming down here, and then the uptrend is going to continue. Or this is wave 1 of a move down, this is wave 2, and you're going to get wave 3, wave 4, wave 5. You're going to get a much bigger move down. Whether it's more of the bullish outcome where it completes that wave C and goes higher, or if it is a bearish outcome where you're just starting a longer downtrend, you have a very high probability of getting this move down. And you could short the stock or buy a put option to try to take advantage of that. Now, again, the reason why I say that you'll see a lot of these is because we've been in a long bull market over the last, and a large uptrend over the last few months. And so if we start selling off, you're going to start seeing a lot of these patterns start developing. And we have already seen some of these develop where they've even had this C leg down, this C move down. And now they're starting to move back up again. Okay. So now I want to point something else out too. I don't know if I covered this when I covered I think I covered it when I covered ABC patterns. But if not, it's an important piece to this trading this. And that is when you usually have an ABC pattern, wave A, wave B, wave C, that typically wave A and C are going to be about the same length. the key word there is about the same length. Obviously, it's not always going to be exactly the same length, but usually we know when, or we assume the ABC correction is done when wave C looks about the same length as wave A. That's always when I start to say, oh, this thing is probably pretty close to being done. The correction is probably pretty close to being done. Now, why is that important, or how is that helpful in this situation? Well, if we go back to this context here, if I'm going to do a bearish trade right here, because I think this is either wave A, wave B, and we're going to get wave C, or this is wave 1, wave 2, and I'm going to get wave 3. Obviously, if this is wave 3, then this is going to be a much bigger move than that first move down, or it should be, because wave 3 should be bigger than wave 1. But if this is a wave C, and then the uptrend continues, I also know about how far that thing should drop, because I can look at how far wave A dropped. Let's say wave A dropped $5. And the end of wave B right here, the stock is at $60 right here. So this might have dropped from, I don't know, $62 down to $57 or something like that, and it's bounced back up to $60. If I'm looking at wave C being about the same length as wave A, I could assume that wave C is going to go from about $60 down to about $55. It's going to make that same $5 move. Now, obviously, it could be a little bit longer than that. It could be a little bit shorter than that, but at least gives me a target. So if I'm looking for a real high probability trade, I can say, man, there's a good chance this thing could drop, anywhere from $3 to $6 or so on this move, and I have a very high probability that could do that. Now, again, I may not make a ton of money off of that, but I can make a pretty high probability, decent amount of money off of that move, especially if I'm using options or something, on a quicker move like that. Now, let me show you an example of both. I'll show you one that I actually just traded, and then we'll look at one that I use this in these updates all the time. And we can even take a look at a couple of ones I went over today. But Boeing was a trade I just did, kind of based off of this. I had this decline right here, larger decline right here. I had a sharper move up. Notice how it went up for 4 days, about 3 or 4 days, sharply up, and then it moved sideways right here. And I figured this was either wave 1, wave 2, and we're going into wave 3, or this was wave A, wave B, we're going to get wave C. So a few days ago, we had this little bullish move right here, and I went ahead and I did a call option on this one. I bought a call option on Boeing. I was expecting it to move right then, whether that was going to be wave 3 or wave C. I thought it was going to move right then. It still moved sideways for a couple more days there. But then we had the big explosive move yesterday on Boeing. And I got out of the trade. Now, with an option trade, I may end up making over 100% on my trade, because it was such a big move there. And I got out because a lot of times when you get these really big days like this, they can continue to go higher, but they also can sometimes pause a bit. You get a little bit of sometimes they'll move a little bit sideways or pull back a little bit. Now, this is pulling back today because of everything else that's going on, and I still don't know if this is a wave 3 or if that was wave C and this is going to go lower. Maybe this Boeing turns around and goes lower. But it doesn't matter. I had a high probability of getting this move, and it may not happen in one day either. This could have happened over 3 or 4 or 5 days or something like that. This move took 4 days to go up right there. But when I got that explosive move, another reason why I got out was it was at a point where if this was a bearish ABC, if that was wave A, this is wave B, and this is wave C, it was at a point where that wave C was about the same length or distance as wave A. So if it was a bearish ABC pattern and this thing is going lower, that would be the area where it would start to turn around and go lower, probably most likely. Now, at this point, I don't care what it does. I don't care if it goes higher from here. I'm out of the trade, but I had a very high probability of capturing that move. And that was about I think I got in at about 215 or something like that. Reached a peak of 228. So about a $13 move right there from where I got in. You know, if you look at, let me pull up some of the ones that we looked at today. Look at so on YAYO, why do I like this pattern right here? Thinking it could start going back up? Well, because if this is wave A, if this is wave B, and this is wave C right now is about the same length or distance as wave A right there. So this is an area where if this correction is done, this is an area where it should be done. And if it is going to be done, this is an area where it should be done and start moving back up. Now again, wave C can be a little bit longer than wave A or a little bit shorter than wave A. That's why we use the word about. And if this stock keeps dropping down and it getting down to here, now you're saying, well, that wave C is almost twice as long as wave A. That's probably less likely to be a wave C now. That maybe that's more likely to be a wave 3. Maybe this is wave 1, wave 2, and this is wave 3, and we're going to get wave 4, wave 5, and this thing is going to have a much bigger correction or come way, way down. Let's look at IZEA, because this is exactly what I was talking about when we were looking. We've been looking at this for a little while. If you go back and view some of the updates, but remember back when I first pulled this up, it was back in here, somewhere in this area right here. And remember, I said this thing is pulled back a little bit right here, but it looks like it might have another move down. That this might be wave A. This sideways move could be wave B, and you probably have another move down for wave C before maybe starting to move back up. If I wanted to, I could have shorted the stock or bought a put. I don't know if this one has options on it, but could have bought a put option or something on it, and we got that move down. There's a high probability of getting that move down, and we got it. Now, by the way, sometimes I don't trade wave 3 or wave C. Sometimes I wait for wave C. You know, if I think this is wave A and this is wave B, and I'm not trying, I don't want to short it, or even though I think there's a high probability it's going to drop, I may not want to take that chance because it might be just a smaller move down. I want to get the bigger move up. I want to make sure I'm well positioned for a much bigger move up. Then sometimes I'll just wait for that wave C, wait for that move down, and then buy in, assuming that's wave C, or with some confirmations it starts to move back up, that wave C is done. So, I mean, that's, you know, if you understand, again, the context of the stuff and what I've been teaching you, then it helps in making whatever decisions you want to make. You know, in this case, my decision might have been to wait. I see what's kind of forming right there. And you go back. If you want proof of this, go back and find. I can't remember the date of it, but if you go back, well, I can probably give you close to the dates if you look in this time period. I don't know when it was exactly. Maybe around the beginning of the month. This is February. Wait. Yeah, this is February 10th, February 8th, somewhere in that area. I think it was somewhere in this area right here when I first pointed this out. But if you want to do a little, go through some of those reviews and find it, you'll hear me say in that update. I don't specifically say this could be, I don't know if I specifically said it could be wave C, but I do remember saying it could. This is a little bit sideways right here. It could have one more move down, though, before starting to move back up. And what I'm talking about there was it could have that wave C. It could have, this could be wave B, and it could have wave C down and then move up. And that's what I was basing that off of, was seeing this pattern thousands of times in my trading career, and knowing that there's a very high probability that it's gonna make that move. So can you start to see the advantage of putting the time in to learn the stuff I've been going over in all these trainings, all this stuff I've been going over, and I'll keep going over and keep pointing out as we do these updates, is that when you know how to trade the market up and trade the market down, and by the way, those of you that are going to start learning about options here in these trainings coming up, that's one of the best ways to trade the markets down, because there's not as much risk as shorting the stock. Many of you are probably freaked out about shorting stocks after seeing what happened with GameStop and almost wiping out a hedge fund because they were shorting the stock and they got squeezed. But there's very little. There's not that kind of risk when you use put options. You can only lose what you spend on the option, what you pay it for in the option. But it allows you to trade markets or stocks down and make money when they go down. So when you learn all this stuff, I can look at almost any stock in any market, and I can find situations where there's a high probability for that stock to go up or go down. There's even, you even learn to recognize where there's a high probability it could move sideways. If you think you're going into a wave V or something like that, you say, boy, there's a good chance we're going to move sideways here for the next little bit. And by the way, you've heard me say that in some of these updates. So now the market's probably going to move sideways for the next few days. So a lot of that comes from understanding waves, understanding ABC patterns, understanding characteristics of trends, trend lines, all this kind of stuff. So it's definitely worth putting the time in to learn this, because the decisions may be to make a trade or not make a trade, to wait. And sometimes waiting is one of the best decisions you can make in some situations. Sometimes you're expecting a real small move. I might only get a $2 or $3 move right now. Maybe an option trade will work better, where I could take more advantage of that small move. Or maybe you're expecting a really big move, and you're saying, boy, this is going to be more of a long-term stock trade, where I just sit on this thing for a few months and just let it go. All right, that's all the time I have for today. Like I said, we'll be back to normal schedule next week, and we'll start to. I think we'll start to get into options next week. I have to look at I don't have my training schedule in front of me where I have the different topics I want to cover, but I'm pretty sure we're close to getting into options. So, all right, thanks everyone. Have a great week. We'll see you on Tuesday for the next market update. Bye now.